But consciously, is it now time to orient the anchoring of the portfolio, which is that last 2-3 years, if you bought into PSUs, you've hit a home run. If you bought into engineering, defense, shipyard, it's been a good run. But now increasingly, those businesses are trading at just in and around fair value. And looking at the construct of the world also, where risk off movements are coming back now, is it time now to have a defensive stance in the portfolio?
So one, again, gap to intrinsic value is what we think. So let's say you took defense as an example. Now defense is going to be a multi-year theme, right? We're not seeing defense spending coming down anytime soon. We're not seeing India's focus of indigenization going down anytime soon. Did the stocks reach fairly exuberant valuations? Yes. We in fact trimmed some of our defense exposure, which we were quite heavy on last year. But also execution misses took place, and this is what we had highlighted last time also, that order books are growing, they are multiplying, but these companies need to execute as well. But at the same time, I think this is going to go on for a long time, just in terms of order wins, of execution, defense companies continuing to do well. So I think there is a price for everything. So if you're a long-term shareholder, then some of these dislocations give you opportunities, I would say.
Deepika, you're here in India, so perhaps it would be more suitable to ask you this question. Do you sense that there is any sort of bubble in any segment of the market, be it SMEs or be it the IPO market? I mean, look at the kind of valuations that they come out with and still get more and more appetite and continue to double and triple from their listing price too.
Yeah, so the IPO activity has been hectic. It's kept us really busy as well. But the one thing about being fully deployed is you don't need to evaluate every single IPO. So the one thing that we're clearly staying away from is loss-making companies, especially companies which don't have a handle on profitability which they themselves can control. So these can be new age companies which were not there 5 years, 7 years ago in new sectors. They're great just in terms of the scale that they've built, but there is no sight of profitability. So I think those kind of things try to give you a sense that yes, there is some bubble or there is a lot of euphoria just because these companies have scaled rapidly in the last 4 to 5 years. But just setting up capacity, we think is not the right thing. There has to be a side to profitability. So I would say if we had to think about something that we're avoiding, it would be some of those areas. And we'll be focused in the IPO space on companies that are more niche, that are more focused on what they are doing rather than just one trend in their space. So to names that we have added, I'd say auto ancillaries is one, which we have had added to via the various QIPs and IPOs that have been happening.
And if there's a bubble, it's not in any particular sector, I think. Although you might have a question about renewables or some niche products, but it's in an asset class, which is volatility. The F&O market is something that we pay more attention to. So the inflows that Nikunj highlighted, they're very large and much larger than they were a year ago, but they're not astronomically large compared to recent levels, as is in the case of the F&O market. There will be more restrictions on that might pull some liquidity out. That probably has more an impact on the the SMID names. Yeah. But given our long-term horizon, then we will step in we have our lists ready to go. I think what will happen is that at some point we'll get a correction and then people will say, is this still cheap?
It'll be cheaper. Don't have any cash?
Yeah. Well, actually, so what is defensive? Nikunj was asking about it. Are you positioned in defensive names? Defensiveness is derived from dislocation from intrinsic value, from the price that you're paying, rather than a particular sector. If you have a staples name that is barely growing top line, earnings maybe mid-single digits, trading at 70 times earnings, that to us is not a defensive, and we're zero weight in a lot of the staples names. But we are overweight, or we have off-benchmark names in the same space. If you take biscuits and cookies, for example, the large cap names, we're not there. But some of the smaller companies, we are there because we see genuine earnings growth. It's not in the price yet, smaller market caps. So defensiveness that's our interpretation of defensiveness. That's how we express it.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.